Is bond breakdown on the back of Fitch's U.S. credit downgrade. The TLT long-term Treasury ETF dropping more than 2%, and options traders are among the most bearish they have been in years on bonds. So, Mike, what are you seeing?
Yeah, well, one of the things we're certainly seeing is a lot of volume. TLT has traded more than double its average daily volume now for 3 days in a row. But one of the other things I would point out is that we've seen a big increase in options premium. So that's probably not that surprising. With the volatility, we would see a big increase in the implied volatility. We've also seen a big increase in the price of puts relative to calls. Right now, they're about 15% more expensive to buy a 1-month put option that's 5% out of the money than a 5% out of the money call option.
Why the long bond TLT is crashing down, as Bill Ackman is shorting 30-year treasuries against stubbornly high inflation. What's going on with the bond market?
CEO Warren Buffett on the rating agency's downgrade of the U.S. long-term credit rating. Basically, he says he's not worried about it, and it's not changing anything that Berkshire is doing in the markets right now. Here's a quote from him. He said, Berkshire bought $10 billion in U.S. treasuries last Monday. We bought $10 billion in treasuries this Monday. And the only question for next Monday is whether we will buy $10 billion in 3-month or 6-month T-bills. That's what he told us yesterday. That's been the decision that Berkshire makes every week recently. That's what he talked about in Japan when we spoke with him there. That's what he talked about at the annual meeting in May. This is the safest place to be. And he doesn't think that people should be worried about this. He made these comments in part to ease concerns about the downgrade. He said there are some things that people shouldn't worry about. This is one. Now, that's not to say that the concerns raised by Fitch aren't valid. Buffett also said that he doesn't agree with everything the federal government is doing right now, but it doesn't change how he sees U.S. treasuries or the dollar. Here's another quote from him. He said, the dollar is the reserve currency of the world, and everybody knows it. So just something to keep in mind on all of these issues if you look to the big investors.
This kind of brings us back to the start of 2022, where long bonds are getting crushed because of high inflation. Now TLT is getting back to retest the October low. Bill Ackman saying he is short in size on 30-year treasuries as a buffer against the impact on higher interest rates on stocks, and as a high probability standalone bets. Based on the oil price action, the trend of long bond TLT, it's safe to say that the bond market has figured out that the Federal Reserve has failed to bring inflation down to 2%. And in fact, some say the inflation number could be going back up again from 3%. Are we about to repeat 2022 all over again? Will the Magnificent Seven going back down because of long bond bear market this time? I will explain it all right after this.
How you like that?
Welcome back everyone to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video, because you're already a success. It is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you are a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You want to join the Audacious Money Witch Club, don't you? There are few macro investments that still offer reasonably probable asymmetric payoffs, and this is one of them. This is why Warren Buffett holds oil and gas stocks. Those are good inflation hedge. Plus, they are some of the cheapest stocks out there with good cash flow and dividend. It looks like oil price is going back up again, as WTI crude is going back above its 200-day moving average. making high lows along the way as long as duration bond is making lower high and lower lows within this year. If this trend continues, inflation is going to come back as higher oil price will dig into all consumer goods price again. Just like the repeat of 2022. So how does this happen? Didn't the Fed raising rates was supposed to create a demand destruction?
My question is, what do you expect that to impact yield or interest rate?
Yeah, well, the answer is I don't know. And the good news is nobody else knows, including members of the Federal Reserve and everyone. There are a lot of variables in the picture. And the one thing we know is we think that long-term bonds are a terrible investment.
Saudi Arabia extends oil production cut even as U.S. gas prices hit 9 months highs. OPEC leader Saudi Arabia is extending its oil production cut for at least another month in a move that threatens to drive gasoline and other energy prices even higher. An official source from the Saudi Ministry of Energy told state-run news agency SPA Thursday that the kingdom will extend this voluntary cut of 1 million barrels per day for the month of September. The source told state media the cut could be extended further and the move is aimed at supporting the stability and balance of oil markets. It's the second time the kingdom has extended the cut, which was first announced in June after a meeting of the alliance between Organization of the Petroleum Exporting Countries, Russia, and other smaller producers. At almost the same time, Russia announced plans to cut oil exports by 300,000 barrels per day in September. Analysts say the moves by Saudi Arabia and Russia were already largely priced in to the oil market, which has been moving higher in recent weeks. This announcement supports those increases, but is not likely to drive prices much higher by itself, said head of term oil research and analyst at S&P Global Commodity. The prolonged supply restraint from Saudi Arabia and Russia comes even as oil prices have rebounded in recent weeks, helping to lift pump prices for U.S. consumers to 9-month highs. It flies in the face of the U.S. effort to tame inflation, said Vice President of Energy Futures. He said that Russia and Saudi Arabia are relying on higher oil prices to fund their budgets. The White House did not immediately respond to a request for comment, for they have not yet filled SPR. The national average for regular gas climbed to $3.82 a gallon on Thursday, according to AAA. That's the highest since late October of 2022 and marks a 28-cent increase over the past month. The gas price spike has been driven by a combination of OPEC supply cuts and extreme heat that has derailed refineries. At some point, gasoline prices could rise to levels that become so painful that it hurts demand. $4 is a line in the sand, said Yager. Once you get to $4, you get demand destruction. It kills the golden goose. Diesel, a key fuel that powers trucks, trains, and boats, is also getting significantly more expensive.
You didn't have to put your tongue in her mouth.
I didn't.
You did.
Look, you ever had your stomach tongued by a mountain ox with a 5-foot tongue? It's not fun for me, okay, Michaela? And it smelled like diesel. Like a diesel-y tinge to it.
You're such a little girl.
Saudi Arabia needs Brent crude to trade at around $81 a barrel in order to balance its budget, according to the International Monetary Fund. The kingdom slipped into a budget deficit this year after reporting a surplus in 2022 for the first time in almost a decade. Russia is trying to boost revenues to support its war effort in Ukraine. According to estimates published by the International Energy Agency last month, Russia's revenue from oil exports plunged by $1.5 billion in June to almost half of the level a year ago.
So basically all of our money that is waiting to be placed is in Treasury bills that I think have an average maturity of 4 months or something like that at most. The rates on those have gone up lately, so that but long-term bonds, they're basically at these rates. It's almost ridiculous when you think about it, because here the Federal Reserve Board is telling you we want 2% a year inflation, and the very long bond is not much more than 3%. And of course, if you're an individual and you pay tax on it, you're going to have some income taxes to pay, and let's say it brings your after-tax return down to 2.5%. So the Federal Reserve is telling you that they're going to do whatever's in their power to make sure that you don't get more than 0.5% a year of inflation-adjusted income, and that seems to me a very. I wouldn't go back to penny stocks, but I think I would stick with productive businesses.
Ackman said high defense costs, energy transition, and the greater bargaining power of workers are likely to stoke higher levels of inflation, adding that he sees a world with inflation remaining at 3%. Against that backdrop, yields on 30-year treasuries could hit 5.5%. It could happen soon, he said. We implement these hedges by purchasing options rather than shorting bonds outright. This makes it easier to sleep at night, as it makes your downside finite. Our sleep at night test is a critical risk management tool. The best hedges are the ones you would invest in anyway, even if you didn't need the hedge. This fits that bill, and also I think we need the hedge, he added. Ackman has reaped hefty gains from past hedging. Last year, Pershing Square raked in about $5 billion of profits by hedging the 2020 crash and interest rate hikes.
But what the bond market does in the next year, you've got trillions of dollars in the hands of people that are trying to guess which maturity would be the best to own and all that sort of thing. And we do not bring anything to that game that would allow us to think that we've got an edge.
His fresh bets against bonds comes just a day after Finch surprised markets by slashing the U.S. government's credit score from their top-tier AAA to AA+, which is another reason why long bond TLT is being sold off right now. You are such a good boy for watching my video right till the end. Bye.